Good morning, guys. Happy Tuesday. Welcome back to the channel. It's Jimmy Trades here. Going to have a look at a CL trade that played out yesterday during the New York AM session today. I want to look at that with the sort of new rules that I'm working towards trading and show you why I thought it was an A+ trade setup. Even though I didn't take the position, I think it'd be good to actually have a look at that as a learning opportunity. We'll obviously have a look at the calendar and we'll run through our daily analysis as well. So let's jump over the calendar. First and foremost, we have Tuesday, no news, Tuesday, uneventful day. So we'll just be looking for liquidity injection at that 9:30 open, 9 a.m. for commodities. Alrighty, let's jump over to the chart. And just a reminder too, guys, you can still get 35% off or up to 35% off with Tradeify for the rest of the month across all their accounts. And Apex, 71% off with $85 PA activation fees across the 250 and 300K accounts. It's actually a pretty good deal because they've reduced the account prices and then you put on the 71%. I think it actually works out to be a better deal than the previous 80%, especially when you take into account the $85 PA activation fees. So quite a good deal. That is also active until the end of the month. Code Jimmy for Apex, Jimmy Trades for Tradeify. Let's look at the charts, and you know what, let's jump straight over to CL. So we're over on CL here. What we're going to do is break down this trade from New York AM session. On the 5-minute chart, we have price running higher here. We've got the London low and the Asia low open and the new day opening gap. So this is the drawn liquidity. We know gaps like to be filled. The question is, and this was discussed in our stream in Trade Foundry during the live market, what is the high time frame point of interest? Okay, so if we move out to the hourly, there is no high time frame point of interest. All right, you could use the 50% level of this wick, and that's something that I have done before. But you know, we're looking really for FVGs or swing highs and swing lows. But we can tie this in and give ourselves confluence. We already have the drawn liquidity, right? The drawn liquidity is there. We've got relative equal lows with the session lows, and we have a new day opening gap. Let's jump over to RB, our correlated asset, and see what RB got up to. Here on RB swept out the Asia high, giving us an SMT. So we now have an SMT with CL. Same high here. We've got this bearish SMT. Now we drop back to the 5. And on the 5-minute chart, and RB took the Asia high where CL did not. So this is what we're using for our high time frame point of interest. This is why I actually believe this is an A+ trade. I didn't take this trade. The drawn liquidity is clear. Session lows, new day opening gap, sweep of an important level. RB did the sweep. Gives us our high time frame point of interest with this SMT. Then looking at this as a breaker potentially, unless we get some more structure. Let's see what price does as we roll forward. So we get a little bit more structure here. And I prefer this as in I prefer this breaker. So we would have got tapped in on this candle because our FVG is confirmed. Stop at the swing high, it's a protected high. And then we just chase a tour. You can trail your stop out if you like. We know that we have the drawdown here because if we targeted even Asia low, it's a 3-hour trade. And so let's see what happens. We're going to retest, so another potential entry. Our price does play around a little bit. Gets stuck between the 930 and 10. But we reach for that Asia low. Do we reach for our draw on liquidity? We certainly do. And we react off of that as well. So if you were game enough to trail this through to new day opening gap, you could have jagged yourself nearly a 5-hour trade. We could have grabbed a 5-hour trade off of that. That's why I thought this trade was an A+ setup. The draw was defined. We had a high time frame point of interest with the SMT to RB. And we had a breaker with a change in the state of delivery with an FVG aligned. We get tapped back in and away we go. So I just wanted to run through that. Let me know in the comments what your thoughts are. Do you agree with me? Do you not agree? I'd love to know what you think about that one. All right, let's clean that up. And we'll move over to NQ on the daily and see what we have. So get out of replay mode. Here we go. All right, so price expanded here on Friday. We've continued that expansion. We've got to close above. And if we run out the 50% of the previous day's range, we can see price is respecting that currently. I would be looking for price to reach for the low-hanging fruit, being the previous day high at this stage. It's a fairly balanced candle, this one. Wicks on either side, much the same, but it is a bullish close and a clear close above some previous highs as well. We also invalidated this bearish FEG. So we closed through that, therefore invalidating. Prices come back into that bearish FEG and using that as support. So we've inverted that essentially. Bullish on the day for NQ. Just quickly have a look at the 5-minute chart from London. I did not execute this trade, but we had a opportunity during Asia. The breaker formed here. If you were to take the close above the change in the state of delivery, was it just a sweet little entry there? And you could have run that out to the Asia high. I probably would put my stop on this swing low here. And a nice little 3-hour trade. If you traded ES in the same manner, you would have actually got a fill if you took your entry on top of the breakup. Alrighty, let's go back out to the daily, moving over to ES now. And essentially the same idea applies here. We're going to look for previous day high, low hanging fruit. We are respecting the 50% level of the previous day's range. And we have closed through, therefore invalidating this bearish FEG, and now using that inversion as support. Bullish for ES. Let's move over to oil now. Got a bullish day today so far. Reaching up into this bearish FEG. Doesn't make me want to be bearish just yet. So let's move to the hourly, see if we've got some structure here we can work with, and narrative and logic. Looking at this, we've had some nice expansion. This is decisive price action through here. Displacing through each candle. We'll be watching. We've got 7 minutes till this candle closes. If we close back inside the range of this candle, there is potential to see some downside. Again, that might even just be into this bullish FEG or potentially this one. I reckon I'm going to want to see a change in the state of delivery before I consider being bearish for oil. All right. Euro futures. Had that period of consolidation yesterday while we're on the hourly. And look at price. Price managed to find some real legs here. We've taken out that low resistance liquidity through here as well. Let's have a look on the daily. We've managed to push through this bearish FEG, and we're doing that quite decisively at the moment. These equal highs look to be the draw on liquidity. All these for 6C. So let's jump over to Dixie while we're looking at 6C because we know they're inversely correlated. For me, I still like the idea of price reaching this low. Much like this low, no wick to the downside, strong draw on liquidity, and price is rolling over here. We've closed through these opposing candles. We've retested this and looks like we might continue to move lower. Move that over to gold. Continuing its move higher here for gold. All-time highs. I'm not really interested in looking to short gold at the moment unless we get a clear indication, say on the hourly chart. But at the moment, we're just continuing to move higher. So this bullish structure just continuing on here. One thing to note is this is very clearly low resistance liquidity. We have these relative equal lows down here as well at this consolidation level. We could see a reversal here to gobble all this up. So we need to keep an eye on that. For now though, if price was to move lower just straight from this level, then I'd look for a close through this price point here for an opportunity to look for shorts from there. For now though, I'm going to actually remain neutral. We are at all-time highs. We'll see how price plays out as we come into New York Open. And we got that price continuing to move higher for GU. Great closure yesterday, solid, clear closure And we can see price has wicked down, bounced off this order block and continuing to move higher. It's also respected the 50% level of the previous day's range. Remain bullish on GU for now. Crypto. Let's jump over to Bitcoin. And now we're in a period of consolidation. We need something decisive here. We're not getting that right now. Still rejecting off this daily SIBI. While we continue to do that, then I'll still be looking for price to reach to the lows here. Sadly, bearish for Bitcoin. Thank you guys for tuning in today. I hope you got some value out of what I presented today. Please feel free to comment. Let me know your thoughts. Be sure to grab those Apex evals and those Tradeify evals. Use the appropriate codes, links in the description. Have a good Tuesday trading session. We'll be over in Trade Foundry for New York Open. Catch you there. Bye for now.